A bit of a surprise from the governor of the Bank of Canada today. Mark Carney said not only are interest rates staying low for now, they'll likely remain low for longer than he expected. That's because the Canadian economy is underperforming and growth isn't happening as fast as predicted. As Shirley Engel reports, there is a silver lining for those who owe money on lines of credit and mortgages.
Turns out Mark Carney was a little too optimistic about Canada's economic rebound. Despite record debt, there's now less urgency to raise rock-bottom rates.
What's not right for the Canadian economy as a whole is to lead with monetary policy, adjust interest rates solely to address issues in the mortgage market, as important as they are, because obviously that will impact the currency, it'll impact exporters, it'll impact business borrowing.
Household debt levels hit a whopping 165% of disposable income last year, but repeated warnings about the dangers of living on cheap borrowed cash may finally be getting through.
Household credit growth has gone from north of 10% to a little more than 3%. So it's starting to approach the growth of disposable income.
In part, thanks to tighter mortgage rules, housing sales and construction are down, and while prices remain high, they're not rising as quickly. A good sign, says the man some believe will replace Carney when he takes over the Bank of England this summer.
Those are some constructive signs that we're moving towards a more balanced housing market, but it's been a 10-year buildup, and it's too early to declare success.
I never thought we had a housing bubble to begin with, and it looks like that we will get a soft landing. And this is the big issue now, because if we get a harder landing, prices fall more quickly, it could have reverberations all through the economy.
Ottawa downgraded its own economic forecasts in the fall. Pledging funding for a new line of hybrid vehicles in Ontario, the Prime Minister said sluggish global growth is a concern.
It's going to obviously having some fiscal impact on us. Will have some impact on the pace of job creation. But look, I continue to be encouraged that in spite of the slowing in the past several months, the Canadian economy has continued to create jobs.
400 more jobs announced at this Toyota plant, gearing up for production of a new Lexus model in 2014. Right around the time economists now expect interest rates to finally start accelerating. Shirley Engel, Global News, Ottawa.